The following is a presentation of TFNN. The Trader's Edge with Steve Rhodes. Call now, toll free at 1-877-927-6648 or internationally at 727-445-1044. The Trader's Edge. Now, Steve Rhodes.
Good morning from TFNN. Welcome to the May 6th wonderful Wednesday edition of today's opening bell on the Trader's Edge. I'm your host, Stevie Perseverance Rhodes, who absolutely knows that each of us should always be pioneers of our future versus prisoners of our past. Hope each and every one of you had a terrific Tuesday. I know I did. It's great to be with you. Let's make sure that we do everything we can to have an extraordinary Wednesday. Of course, the easiest way to do that is to always remember that life happens for us, not to us. That's right, that little 2x4 shift out there means that you and I, we can find the gift in every set of circumstance that life is going to toss at us. Now, we certainly need to know that when we are trading these markets, because there's always something for the bulls and always something for the bears. It's up to you and I to go discover what is the message of the markets. Of course, it always depends upon the time frame that we're looking at. Now, I'm absolutely grateful for your presence here. I'm here to serve you. So feel free to dial on in at 877-927-6648. Of course, internationally, you can call on in at 727-445-1044. This is Wonderful Wednesday. Of course, it's Tiger Financial News Network. I'm Steve Rhodes. Welcome to the show. Right now, we got Dow futures up 57 points, trading at 17,921. S&P futures up 5.5. They're trading at 2,089.50. NASDAQ up 3 points. A little weak link out there. That's trading at 44.10. So we might as well key in on the NASDAQ here this morning, see what it's doing on multiple time frames. Russell 2000 up about 3 points at 12.17. King dollar back fairly hard, off 640 ticks right now, trading down at 94.55. Gold not doing much. Gold is up 250. So we got to figure out what's the meaning there with a big pullback in the U.S. dollar index, and gold basically lackluster. Silver maybe just needs to be shined. If we take a look at silver, it's up 4 pennies. Lackluster there as well, trading out at 16.62. Not lackluster is light sweet crude. That's trading up at 61.90. That's up about $1.50. Quick peek across the globe out here. Let's go see what we've got going on. Over in Asia last night, we know we don't have to pay attention to the Nikkei because of Golden Week. Not the case here in the Shanghai. The Shanghai was down 72 points last night, 1.6%. As we take a look at it, it looks like the Shanghai is, let me do this out here, just to make it a little bit easier for you to see and follow along on TigerTV. Let me get rid of that. Let me change the colors on this because I've got Fibonacci retracements coming from the high to the low, and now we're going to go take a look at from the, I'm going to turn off the 0.786. Got to get rid of as many colors. So we've got the 0.382. Let me change the color on that to yellow as well. So if you're watching us on Tiger TV, hopefully you are. If not, let me describe to you what we're looking at. In the case of the Shanghai, came off of the bottom out here from February 9th, really with a vengeance. Just a significant move higher because it went from 31.94 up into the 47.91 level. Now, what we're seeing, and we know that it was in the extreme overbought condition. A nice little price relative strength divergence pattern out here. Didn't really confirm anything. So it would say to me we're more likely just looking at just a normal pullback inside of this index out here. So that says a Shanghai. Now, when you say normal, you've got to identify really your normal areas. Well, normal, strong market, which this is. So super strong market. And a pullback into the 0.382 retracement, 41.81, is the likely price target. Now, a lot of people might say this index going from 47.91 to 41.81, that's it. It was a huge top that was put in, and it's over. Come on, folks, you and I know better than that. That's only a 0.382 retracement. The reality is this index could easily move to 38.04, and nothing could be wrong with it. So, but this stage of the game, 41.82 is a game inside of the Shanghai. If we take a look as it works, and if it never makes it down there, man, you want to talk about super strong out there, Superman, that would be inside the Shanghai. If we take a look at the Hang Seng out here, off about 0.4%, that means down 114 points last night. Now, this is actually stronger. We take a look at how it's dealing with its overbought condition because it truly is just trading sideways, and consolidating at the highs out here. So super strong looking as we take a look at this index. If we go take a look at what's going on over in Europe this morning. Interestingly enough, the DAX, not the DAX, sorry, the FTSE here did close below that 1999 level of 69.50.60, but just barely yesterday. You're actually trading at 69.57.44. You and I were watching that because we're watching the DAX, especially during this unfavorable seasonal cycle. The next, we'll really call it, it's really not a 6-month period. The original work that was done, I forget the individual's name off the top of my head, but the original work that was done was just simply broke the market down into 2 time periods. The May 1st through October 31st and the November 1st through April 30th out there. But the reality is, that we should actually rename that because it's just bogus out there. Actually, if you were going to take a look at the unfavorable seasonal cycle, it would really be between the truth is, it would really be between the June and middle of October timeframe out there. It would not be that doesn't mean there's not some rocky roads, but it really, the rhyme out there is just like folklore more than anything else in the marketplace. Now, with regard to the FTSE, we're watching this because of the synergy of our markets here. And if the FTSE truly can stay above and continue its breakout above that 1999 level, that's very strong in the market. Just simply consolidating patterns are consolidating patterns. And prices either break out and then continue to make that measured move equal to or greater than the consolidation pattern, or they break out and they fail, or break down and they fail. So they're great patterns out here, and that's why you and I are so focused on the FTSE. If we take a look at the DAX out here, DAX is up 32 points. DAX got hammered yesterday. DAX actually closed, well, it did not close below the potential of that B point that we were looking at, its most recent swing point low. At least I don't think it did. 11.331 got down to, closed at 11.327. No, it did. No, it did. It did close just slightly below that level. So at this stage here, the DAX, there's no reason for us to think that the DAX is not going to go ahead and complete a second A to B equals CD to the downside out here, and that would take you down into about the 11,000. We'll call it 11,000 even Steven out there right now. I would have to say if, in fact, does continue to move lower with conviction, you're more likely looking at 10,800. But let's not forget, let me see if I have that on this chart right here. I put up the monthly chart. When we take a look at the DAX, remember I just mentioned consolidating patterns, and if we look at the DAX out here, its consolidation pattern really beginning back in 1995, all right, consolidation at the lows, the tops of it back in 2000, and we actually saw the DAX, so this is really just by like taking a look at the FTSE out here, and the DAX actually really broke through this level, took several months in order to break through that top of that consolidation, but it finally did it in the month of September in 2013. Let's not forget, in the case of the DAX, it's broken out, it's proven itself, it's come back, it's tested it. There is absolutely no reason for it to get back to the top of that level, which is right around the 81, what is it, I don't know, somewhere around 8,100, we'll call it. At this stage of the game, the DAX wants to make a move up to the 14,000 level. So far, the high that we've seen has been 12,390. So it still has more work to do to the upside, which is the reason that we want to be able to identify the Gartley buy pattern, because coming off of its lows out here, quite frankly, the DAX coming off its lows back in October of 2014 has not made any kind of A to B equals CD to the downside. That's the pattern, in essence, that has been in play out here. We saw the first one that formed. We did not get a bullish reversal signal. So we're really waiting for some multiple of A, B, C, D patterns out here, because this is the true Gartley buy pattern. So if you're a person that believes, check your bias at the door out here. And if you are one that truly believes in a Gartley buy or sell pattern, perhaps one of the, because, this could be just one heck of a, 14,000 is the minimum price objective inside the DAX. Remember, any break of any consolidation patterns equal to or greater than the consolidation. And quite frankly, you can make the case that this is a huge A to B equals CD to the upside that is setting up. I know a far cry from some of the emails I got out there that believe that the DAX has hit its peak and it's just simply going to tank and it's going to make its way back to the $8,000 price mark out there. Maybe it will, but we'll see when that Gartley buy sets up. That is going to be or should be a nice buying opportunity out there. So that's what's going on in the markets overseas. Now you want to know what's going on in our markets. I mentioned the NASDAQ here. We took a look at what's going on in the futures market. And so let's start off by taking a look at a number of different things. Let me first start off by taking a look at, and we had that great hour hosted by John Logan out here, and he was taking a look at his market profiles, as he should. Now, I didn't catch the show out here, so I may be just repeating some of what he's looking at. But right now, what we're looking at here, this is the NASDAQ and NASDAQ futures, right? So it's the week link out here. We take a look at the bounce thus far inside the futures market. So let's go take a look at what we do know. From upper left to lower right, we're going in chunks of time frames. We've got a 30-minute upper left, center upper portion is 60-minute. To the right is 120-minute. Down the lower left is 240. In the center at the bottom is 300-minute chart, 5-hour energy drink chart, and the bottom right is the daily. So what can we see out here? Right now, the NASDAQ futures are at support on all time frames, at or above support on all time frames. That says, if we take a look at the 30-minute chart, it says 44.0570. 60 minutes got us at 44.06. 44.07 on the 120-minute chart out here for a support level. Looks like about 44.07 on the 240-minute chart, and looks like right now at about 44.10. So let's call this. If this area fails, and we're going to call it the 44.04 level, if we see a move down below that, then that sets up a price move probably down to the daily bottom of its box around 43.70 out here. So what we know is that on multiple time frames, 30, 60, 120, 240, and 300, prices up against what should be a level of support. 240-minute chart, it's actually in a bullish formation, meaning that point of control, that light blue level, is closer to the bottom of the box. So this here tells us that buyers say that they really want to try to move price up into about the 44.40 level out here, and that's looking at a 4-hour chart out there. In the 300-minute chart, super bullish right down at these lows, because there is no point of control on the 5-hour chart out here. That point of control is right there at the support level. So that says that that is a data window. We just gave you the exact number out here. That says that this 44.09 area is a super strong level of support. So maybe we can change it, since that's the case on this 5-hour chart. Any close below 44.09 says that the market continues its ramp to the downside out here. Now, it's going to have a tough time doing that today. Let's go take a look at one of the reasons why. We're going to go take a look at the headwind that it's truly traveling in. So I'm giving you this information. You know, we are taking a look at the markets both on the bullish side and the bearish side out here. You've got to do that. You have got to check your opinion. Look, you don't have to do anything. I just believe in order to be the best trader out there, in order to truly read the message of the markets, check your opinions at the door. Come back and take a look at the charts, as you and I are going to do when we get back from this breakout here. But that Euro Japanese yen, she's headed higher. That's a headwind, folks, for the markets going lower. We'll be right back. Do you know the 7 most critical factors that influence every decision you make, and how not knowing these will jeopardize the health, the wealth, and the relationships you deserve? I'm Steve Rhodes, morning host of TFNN.com, and for the last quarter of a century, I've studied and used the secrets of human growth, the same formulas used by leaders of nations, billionaires and millionaires, and the most successful athletes on the planet. Would you like to break through any obstacle that gets in between you and the success you deserve? Would you like to turn fear into strength? If you could find a way to achieve, be fulfilled, and live a life of meaning, wouldn't you want to know the answer? I'll teach you the factors that control your state of mind and the drivers that impact every thought, emotion, behavior, and action we take in my new webinar, The Psychology of Trading. Join me for this 2-part online event where I'll unveil the secrets to human pattern recognition, because they're not what you think. And soon, you'll have the health, the wealth, and the relationships you deserve. Just go to the homepage of TFNN.com and click on The Psychology of Trading to begin your journey now.
Trade with confidence and clarity while using the software that thousands of institutional traders rely on to make the best and most accurate decisions. Choose from 1,000 equities, currencies, and futures instruments utilizing the TAS architecture. As seen on Bloomberg terminals worldwide, the TAS Profile Scanner is a benchmark technical filtering system that thousands of traders rely on, and now you can too. For a limited time for TFNN subscribers only, we've reduced the price to just $97. That's over 75% off. John Logan hosted a special subscriber-only webinar in December, and you'll gain access to that archive as well, so you can learn exactly what the TAS Profile Scanner can do for you. Try this product out. No matter what you trade, the TAS Profile Scanner can help you make more informed trading decisions. There's no obligation to pay anything. Don't let this offer pass you by. Get your 30-day free trial to the TAS Profile Scanner today by signing up at TFNN.com. Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com.
The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN, and you'll find The Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
Tiger TV is an exciting way to experience TFNN programming. See high-definition video, giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com. Steve takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Welcome back, folks. Right now, S&P futures are up 6 points. NASDAQ futures up about 5. So I mentioned the headwinds as we were going into that breakout there. And what you and I know is that the Euro-Japanese yen is the carry trade out there. It's just the currency pair that tracks U.S. stock market better than any other currency pair out here. And therefore, you and I, we want to pay attention to it. Now, from the bearish side, let's say, and I'm in a bearish position in the market, but it is for a longer-term time period. And I mentioned that to you guys on the show yesterday. But nonetheless, we're going to call the market the way that the market is trading and the signals that it's giving to us as we speak right now. And we take a look at the Euro-Japanese yen. It's trading in a northerly direction. It should go try to take out its most recent high at 135.28 out here. Now, in this case, we actually got, let me take back this retracement. There's been virtually no retracement here, so I'm going to go ahead and get rid of that line, or those lines on my chart out here. We know about this currency pair is that came off the bottom back here in the middle of April. We did get a little bearish engulfing candle right here, May 4th, but there was no follow-through on the very next trading session. Now that's being taken out. Now, actual resistance inside this currency pair is right here. And there's really been no retracement in order for us to really be able to create an A to B equals CD pattern to the upside. So we can't really use that as a level as to where this currency pair might be headed to. What we just know is that there's a little congestion area of swing points out here from back in the February time frame. And so maybe 136.60 169 could be the extent of the move out there. That would be 100% move. But if it gets much beyond that, what we're looking at a deeper retracement, a deeper move to the upside. You can see right now it's also right up against that 0.382 retracement level. So in this case here, any move above the 136 area is going to take you up into the 140s. That's your 0.618 retracement level. Now, of course, what you and I want to also focus on is the euro versus the U.S. dollar. That was the euro versus the Japanese yen. And what you and I have been watching here is we've been watching its move inside this descending price channel. And we know that on April 13th, it has come off the bottom of that price channel. And right now it's targeted to hit the upper boundary line. Today, if we were to make a big, large move out here, you're looking at a price move into the 114-ish area before it provides us any information as to whether or not this is a more serious bottom retracement inside of the euro. Now, I do believe that so you've got this. So this is why the U.S. dollar index is pulling back, because of the movement. This is one of the reasons, right? It's 1 out of 6. However, it's the weighted reason as to why the U.S. dollar index is pulling back here this morning. But the U.S. dollar index is pulling back, and gold is doing nada out here. There was a time period. It was several months ago when my conclusion. And I'm going back to my conclusion. My conclusion with regard to the movement in gold, because we always take a look at gold as priced in dollars. And the reality is sometimes patterns change out there. Many times patterns remain the same. But it just appeared to me that the real breakout that we saw inside of gold as it is coming off of the bottom out there was when gold priced in euros got above, I think it was like 1,000 euros or 1,050. It was right in that range out there. And at this stage here, gold priced in euros with the euro moving up, it sounds to me like it's probably retracing. Maybe somebody out there, I don't have access. I should have asked Tom to go ahead and post a chart with gold priced in euros, because what you and I know, so I'd go take a look at this chart right here. Here's the price. Here's the euro up on the upper portion of my screen, and here's gold on the bottom portion of my screen out here. And certainly at this stage we can see fairly. I don't even know if is there a correlation that we want to. What I want to see is the price of gold in euros, and to see when we get back to that 1,000-ish euro level, 1,000-ish, 1,050. Because what you and I know about gold is it's just really trading in this very thumb-oriented. Thumb is on the gas pedal, or no, thumb is not on the gas pedal. But the closing price of gold is just in a really narrow banded range out here. And I think that for gold to really take off, it's going to be dependent upon the euro. Certainly because it's got a big influence on the dollar. But I think that just like that 1,000-ish euro price in gold was when gold had taken off. And I believe that was the gold takeoff back here in November. It was either the one in November or the one in March. In any event, I don't want to go tax my memory that far. But if we had a chart, we could find out for sure, because we can see that gold broke above this little horizontal trading range, that when it was priced in euros, when it got above that level, gold just simply exploded to the upside. In any event, when we come back, we're going to go see how these markets are going to open out here, whether the gains are going to be extended. Maybe we'll go take a look at some of the intraday charts as well. We'll look at it for the S&P futures contract, which made a G pattern earlier this morning. We'll be right back.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com.
If you're like me, you see the world's emerging nations as a very real opportunity, as these countries and their economies are developing right before our eyes. And you can rest assured that Everbank has spotted this opportunity too. In fact, they just recently unveiled the new 5-year market-safe Future Economies CD. This is a CD that could really deliver, but you have only until May 7th to take advantage. Consider the facts. If the Future Economies currencies beat the US dollar over the CD term, you'll get all of the upside. And should they lose? No worries. There's zero downside risk here, as you'll still get back 100% of your deposited principal. Intrigued yet? The May 7th funding deadline is quickly approaching, so hurry over to everbank.com/TFNN-CD for more information, including important product details and disclosures. Once again, that's everbank.com/TFNN-CD. Everbank is an equal housing lender and member FDIC.
Who says you can't take it with you? TFNN says you can. With your mobile device and TFNN's live radio streams, TFNN has put it all in the palm of your hands. No special apps to download. No subscription fees for live radio or TigerTV streams. We say you can.
Each and every time that the dollar ticks higher, S&P wants higher price. Each and every time that the dollar's ticking lower, guess what? S&P wants lower price. Dollar, the metals, and the S&P are going tick for tick.
We say you can. The Tiger Financial News Network. Smart investors and professional traders know you can. TFNN.com. Educating investors. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Races. We got the Dow up 85 points, trade out at 18,014. S&P up 8 at 2,097. Composite up 18 points at 49.57. Russell 2,000 up 7, trading out at 12.22. The DAX is up 58 points. The FTSE up 35. Silver's down 17 cents. Gold is flat out here. Light sweet crude up $1.25, leading the charge. The upside up $114. So that's clearly some type of buyout out there. Ticker symbol Jiva. Who's buying them? What's the deal? Alexian expects the acquisition of Synergiva. So that's what a nice premium inside of that equity. Man, I hope somebody is out there listening is holding in on that thing. We've got Border Free. That's free to run out here. That's up 105% out there. BRDR, what's their deal? Let's see out here. Looks like some other kind of buyout that's going on. Nice premium there. Herbalife, no buyout of Herbalife that I'm aware of. That's up $6 this morning. BioMarin Pharmaceuticals up $4, 3.7%. The IBB up just slightly, up $3, less than 1% right now. Anheuser-Busch is up what? Oh, I was looking at Fate Therapeutics, right above it, up 66%. So we've got the merger and acquisition is alive, full and well out here. Alexion Pharmaceuticals down $12, but that's just simply based on the buyout going on with Synergiva. We have Trinet Group, that's off 15%. Fossil Group down 5. Doesn't look like today's a good day to be a part of a group out here. Noodles and Company, that's down 19% out there. We'll go take a look at that. Zulily off a couple of bucks. So let's go. I mentioned the G pattern inside the ES Mini. So I think it's a great. This is about 4 o'clock this morning, 3:30 or 4 o'clock this morning, when my alarm went off to notify me that on the 30-minute chart out here that the ES Mini had just formed a seventh wave pattern to the downside out here. Now, really cool pattern, because when we take a look at that's by the way, the price point on that was 2081.25. So the price level that's the low of that candle session. So the price point that you really want to be watching here today is any tick at 2081 violates that pattern and says, okay, the market will or should continue picking up steam to the downside. Otherwise, we can expect this area to hold and the market to move higher. So inside of the ES Mini at this stage, because we've got a nice new little market profile out here, 2084.75, 2084.50 to 2085.75 on the 30-minute chart that we're looking at. That should be a good area of support. If that level fails and that low of that G pattern fails out here, the market should continue moving to the downside. How much room to the upside, that I can't tell you out here. But we do have that nice wave pattern, that seventh inning wave stretch out here. It is something that just simply you cannot ignore out here. You cannot ignore it, especially in the markets that we are in right now, where, quite frankly, the consolidation-oriented moves out here, something good for the bulls one day, good for the bears the next day or within a couple trading sessions, just simply something that you cannot overlook out here. Now let's go take a look at some of these equities here that are moving. Let's go take a look at to the downside. Let me see with this Trinet Group, make sure there's nothing out. That's just based on their report of their fiscal 2015 results out here. I don't see what those results are, but shareholders do, down 5% and moving into, so this has had some problems before. This has support. Let's go take a look at where there's a support level that has held on this equity. And it was really back in August 2014, this thing had broken out. There was a sign of strength out there. In this case here, that sign of strength was just short of 1 million shares. There was another sign of strength in this equity, much bigger sign of strength. That was with 7.2 million shares, and that was on the trading day of September the 12th. So support on, now this thing fell out of bed. With quite a bit of volume, 7 million shares with quite a bit of volume right here on the trading day of March the 4th. That had volume of 7.1 million shares to the downside. And that's really what it's traded down into right now. So it looks like this equity is more likely headed to the 2478 area, 2478 to 2746. And that is ticker symbol TNET. Fossil Group, part of the group family out here, that's off by 6%, down $5. Looks like they're out with numbers as well. I don't see what those numbers are, but let's go take a look at Fossil. Now, Fossil's got this high volume low out here, this gap down, big wide-ranging bar to the downside. So certainly it is going to be testing that area. It doesn't look like we've seen a test. Maybe it has already here this morning. No, 79.85, the actual low, 79.95 right now. That's got volume here of 13 million shares, 13 and counting. And so far today, it's done about 1 million shares. There's only 9 minutes of trading out here. So what we want to do, let me come back and take a look at Fossil Group. Let's try to put this on a longer term price chart out here. Let's take a look at a weekly just to get a feel for where this is perhaps headed to. So in the case of Fossil Group, likely headed back into, man, that's pretty nasty looking bar, is it not? The week of May in 2012. That is just about as nasty as you can get. But it does look like Fossil Group probably headed back into the 62.77 type area. Ticker symbol there, FOSL. Let's see what else we have moving here to the downside. We've got Noodles. Let's go check out Oodles of Noodles, Noodles and Company, down about 18%. That's a stinger out here. That's off about $3.80. So as we take a look at Noodles, it's the weekly chart that's going to show up on my screen out here. And this is hitting all-time lows, that looks like. Yeah, most certainly is this week. So here's an IPO, takes you back into the June 2013 level. Basically, nearly everybody in this equity is in a losing position out there. Maybe they get a card that gives them access to, a discount on meals, because there are folks that probably bought this IPO, who knows, somewhere in the $50 area, and this stock is trading at $16.79 as we speak right now. No idea where this thing is headed to. That is ticker symbol, again, is NDLS. Now let's go take a look at some equities here that are moving to the upside. Let's take a look at Herbalife, Border Free. No, that's about 105%. Let's go take a look at Herbalife. HLF is the ticker symbol. Out with numbers, 1.1 billion versus 1.26 on the top line. So they missed that. And the bottom line, earnings per share, $1.29 versus $1.50. So it looks like they've missed the bottom line as well. Nonetheless, this is trading to the upside. So let's go take a look at Herbalife. Again, HLF is the ticker symbol. That's up 16% out here this morning. What's this trading into? The case of Herbalife, I can see a area here that's a supply line. You can see it as well. We'll draw a couple of different lines across our screen, and this is where Herbalife is trading into, which says that every time price gets back into this 48.70 type area, this is where Herbalife most recently, I should say, really struggled. It had 12.8 million shares to the downside out there. That was on the trading day of November the 4th, and that's your area of supply out here. So likely Herbalife not to get too much above that, if at all. And if it does, then it's got some resistance at about the $53 even Steven number out there. All right, so we got the Dow's off 15, S&P is flat, down $1.83, Composites off 7 points out there. Let's take a look at Children's Place. PLCE is the ticker symbol. That's up 6% this morning. That's up about $4. This thing is gapping up on revenues, on numbers out here. I don't know whether it's revenues or not, but it's gapping up. I don't show the actual numbers. Let's go take a look at it. Children's Place looks like this could be an all-time high. Let me put this on a weekly time frame for us. Let's take a look at what the weekly is showing. It's either a 52-week high or an all-time high. In this case here, looks like it's all-time high. Whoops, that didn't work. Give me a moment here to get back to the stock chart. If we take a look at if we take a look at Children's Place, PLCE, so all-time highs out here. Let's go back to the daily. The weekly, by the way, the swing point that it's dealing with from a weekly standpoint for an A to B equals CD pattern has volume of 3.4 million shares, 610,000 shares already for the week. But let's go see what this thing is doing today. Let's be present and see what it's doing today. So it gapped up. It's off of it was able to get to a price, gapped up, opened at 65.98, got to a high of 68.23, currently trading at the $65 mark out here. This thing is struggling a bit, but if it can close above, we're going to call the price point here of 64.16. There's only 946,000 shares on that day, and that would be the daily B point that I would be looking at for an A to B equals CD pattern. So if it is able to do that, then Children's Place at all-time highs would likely go ahead and target. Let's go take a look at its A to B equals CD pattern out here. It would likely give you a price projection. Come on. Give me a moment here to pull this back. Gives you a price projection somewhere in the vicinity of 72.50. So 72.50 if it can stay above the 64.16 mark. And that is on PLCE. Okay, now let's go check in on the markets here. So now we're seeing a sell-off. Let's go see if that G pattern has failed inside the ES Mini. So let's go take a look at it. And it has. So it has failed, and that's a point where during these last several months that should not have failed. That is going to suggest that we do have some lower price coming at us. So let's go check in on the summation index out here. Let's go check in on it. So that was a quick sell-off. As we look at it, the New York Stock Exchange right now, the reading on its price oscillator is down at about the 152 mark. So it's got lower to go, much lower to go before we get into a oversold bounce territory. So that's what's going on there. Let's take a look at the VIX index. This should be up well above the 50-day exponential moving average now, and it is. Right now, it says yesterday the close was just slightly above that. Yesterday, the 50-day exponential moving average was 1419, and the close yesterday was 1431. Now you're trading out at 1509. And this is where, as long as where the 50-day exponential moving average has been acting as a resistance line out here. And what you and I know, and if you're new to the show, let me just show you this pattern out here. That way you know why Stevie at least spends so much time taking a look at it versus getting caught up in too many of the old adages out there. So I'm taking you back to when? This is 2011. I'm just going to take you back into the 2009 time frame. That's going to be easier to show you this. There we go. So now we're in 2009. And let's see, where we get down to 2009, get down to the March time frame. What I want to do is I want to dislodge the false rumor out there that a high VIX high VIX reading means that the markets are definitely going to go ahead and move lower out here, because that's not the case. See, if you come back here and where my crosshair is at, is a crosshair on this chart. The upper portion, by the way, is the VIX index. The bottom portion of the chart is the S&P 500. And if we take a look at coming back into the March time frame out here, March of 2009, notice how the VIX index, even though it's priced in the 40s area out here versus where we're at today, we're at 15. Notice how the 50-day exponential moving average acts as a resistance level. And what does the market do? The market moves to the upside. That's why I say you can also really use, to me, the benefit of the VIX indicator is that it's a liquidity gauge out here. And only do we see significant continued erosion inside the markets when the VIX index gets above and stays above that 50-day exponential moving average. So then that takes us to today. So yesterday, we see that we had a close just slightly above it. Today, in order for the bulls to continue their legs out here, you now need to start seeing the VIX index hold as a support level. If it holds as a support level, just as it did right back here, if we come back in the time frame of September in 2014, if it can hold above that level, that's where you start to really see the erosion in the marketplace. So that's this little center box that we're looking at out here. So where the VIX closes today is very important, and not with regard to what its number is, really with regard to the relationship that it has with the 50-day exponential moving average. So the key level to be watching right now as we speak is 1422. This thing is trading at $15 and a penny out here. So the Dow's up 54. Now, Russell 2000 is up 24 cents as we speak right now. And that has been one of the weaker, or that has been the weakest of the indices out here. So let's go check in on the IWM. The IWM is off 14 cents as we speak right now. And what we know about the IWM is that it has tested the swing point from back here on the trading day of March 10th, which only had 32 million shares. It's been tested now 3 times. The first time that it was tested was back here on April the 30th. And that had volume of 72 million shares. Wasn't able to bust out the lows. In fact, didn't even test the low of that swing point. It rejected that swing point on price. But too much volume said it would be back down there to see it one more time. Well, that was yesterday. We saw 56 million shares. Not 56 versus 72. So that was coming in light. It did not have any momentum to the downside out here. However, it was still 52 million shares going against 32. What was its message? Hey, we'll be back down there to see what's going on inside of the IWM. Today's volume is going to be key inside of the IWM. One, if you'd like to see it actually test that low, the low of that trading session, March the 10th, is a 119.83, at least to give you information, bullish and or bearish out here. Nonetheless, markets don't always do what we'd like, and therefore we're going to watch today. We already know we've got another test going on. Does it do it with more than 32 million shares? If it does, it'll just keep pounding and pounding and pounding until we get a real test of that swing point low from March 10th, 2015. We'll be right back, folks.
You take a hands-on approach to managing your investment strategy. You're always looking for the next trading opportunity to magnify your perspective. Direction Shares connects sophisticated traders with a powerful array of ETFs from a wide range of asset classes. The markets may go up and down, and you want tools for both sides of the trade. Discover how we can help at DirectionShares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction Shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor Foreside Fund Services, LLC.
Do you know the 7 most critical factors that influence every decision you make, and how not knowing these will jeopardize the health, the wealth, and the relationships you deserve? I'm Steve Rhodes, morning host at TFNN.com, and for the last quarter of a century, I've studied and used the secrets of human growth, the same formulas used by leaders of nations, billionaires and millionaires, and the most successful athletes on the planet. Would you like to break through any obstacle that gets in between you and the success you deserve? Would you like to turn fear into strength? If you could find a way to achieve, be fulfilled, and live a life of meaning, wouldn't you want to know the answer? I'll teach you the factors that control your state of mind and the drivers that impact every thought, emotion, behavior, and action we take in my new webinar, The Psychology of Trading. Join me for this 2-part online event where I'll unveil the secrets to human pattern recognition, because they're not what you think. And soon, you'll have the health, the wealth, and the relationships you deserve. Just go to the homepage of TFNN.com and click on The Psychology of Trading to begin your journey now.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
Basil Chapman has just announced 2 live workshops that he'll be hosting April 28th and May 5th that only subscribers to his opening call will gain access to. On April 28th, Basil will host a 45-minute live online workshop, The Essentials of the Chapman Wave, where he'll teach the basics of the Chapman Wave notation that Basil created and uses daily in his trading and newsletter recommendations. On May 5th, Basil will host a second 45-minute workshop where this time he'll revisit the 1929 market comparison webinar and provide his attendees with an updated take on the socio-economic trends Basil has spotted currently taking place. If you're an opening call subscriber already, then your seat is already reserved. If not, then sign up for a 30-day free trial to the opening call today. You get a month of Basil's daily newsletter, The Opening Call, along with 2 live workshops coming up. Don't miss out on this offer. Sign up for Basil Chapman's Opening Call newsletter today on the front page of TFNN.com.
Catch Steve Rhodes as he teaches techniques on technical analysis using pattern recognition, celestial charting, Fibonacci, and other tools. The Trader's Edge, next on TFNN.
Welcome back, folks. Dow's off 86 points right now. S&P's off 8. Composite down 21. Russell 2000 just turning negative. You know, we were taking a look at the IWM before we went into that break. I'm going to put up the chart here for the actual Russell 2000 index. So today's going to be an important day to watch what this does. Now, when we take a look at it, you're looking at on my screen a consolidation pattern here. This had been consolidating for quite some time, as you know, between about the 10,079 level up to 12,1282. I didn't notice this until just now. Yesterday's price move to the bottom got you down to 12.1177, closed at 12.15, just above that level. Now, if you see a close today below 12.82, that says, hey, guess what? The consolidation breakout of what? That was 130 points. That's going to be put on hold here for a while. And whenever that happens, it can actually get down to the bottom of the consolidation pattern. Likewise, if the area gets tested and holds as support, then price just simply coming back and testing out a level of support, the top of the consolidation. So I say the Russell 2000, probably the indice to be watching today for additional clues as to what the market wants to do. Let's not forget we've got that Euro Japanese yen moving topside out here, and so that it should matter at some point in time. It most certainly does not matter at 9:55 a.m. The key here is going to be watching the New York Stock Exchange. Now we've seen this move lower with some conviction, and now the oscillator getting down to close to that minus 200 reading out here. So look, folks, even though I took a bearish position on the market yesterday, I'm also not naive with regard to what these markets are doing, or at least the messages in the past that we should always be paying attention to. That New York Stock Exchange price oscillator gets down to the minus 200 level. What you should be expecting is a significant bounce. And I do mean a significant bounce. We're not there yet, and this price oscillator doesn't really turn in its worksheet until the end of the day. So, folks, stay tuned. Tom O'Brien, he'll be up with his market message in just a few minutes, and I'll be back for the second hour of the Trader's Edge. If you're off to start your Wednesday, have a wonderful day, and I'll see you bright and early tomorrow morning.